Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, June 1st through Friday, June 5th, 2009. Well, folks, let's talk some markets because we had one of the wildest Fridays, a pretty crazy last week overall. The market indexes all gaining last week across the board after pausing for a little bit in the previous week or so. Now, the key last week, and especially last Friday, was the massive buy programs that came in on the markets late in the day on Friday. This was probably one of the most intense buy programs I have seen as a trader in my years of trading. It is truly amazing because what you had all day was extremely light volume. It was on pace to be one of the probably top 3 to 5 lightest trading days of the year on Friday. And then out of the blue, just around 3 o'clock, at the 3 o'clock time frame, and those of you that follow time, price, and pattern, those are what we really follow. That's our holy book and analyzing the stocks. And exactly at that time frame, bids came in, and it was led by Goldman Sachs and JP Morgan. Now, we all know that Goldman Sachs is somewhat of the king on Wall Street, that when that one stock rallies, the rest of them seem to rally. But that rally really took off, and I want to show you this, folks. Let's take a look at Goldman Sachs intraday chart. Look at this chart, the amazing issues here, where the Goldman was probably the weakest stock all day long, ultimately kind of just gapping higher initially at the morning onset, then kind of selling, pausing, selling, pausing, selling all day long until it came down to the 200 moving average. And it was almost like the program trading that came in here was computerized and exactly programmed to hit the 200 moving average on the 10-minute chart. And that's what we follow, and apparently that's exactly what the big computer trading programs that Goldman Sachs and the rest of them have out there that are following. All right, now exactly look at this. 2 days ago, or last 2 trading days ago on Thursday, the exact penny hit of the 200 moving average caused a buy program that reversed Goldman and caused a major squeeze in the markets that really caused the whole up day on Thursday. You can see it right here. I mean, Goldman Sachs hitting 139.50 and then boom, off to the upside and rally all day. Well, Friday we had the weak Goldman Sachs, same thing, hits that 200 and buy programs come in. Now again, the key to these buy programs are they only really have to start out. Once they start and push this Goldman up and start pushing it, the rest of the buyers out there will see it happening and they'll jump on board. Then it'll turn into a short squeeze and really continue. So really fascinating though, because this is exactly what turned a Friday day around. Now you had Friday, as I mentioned, light volume, and we're going to go back to the charts here, and you can see light volume, kind of wishy-washy trading all day long. The Dow was up 20, the Dow was down 20, the Dow was up 30, the Dow was down 30, up and down here. You can see gapping up, selling off, pushing up, always into this 91.50 level. And this 91.50 level all week, last week, we were telling our premium subscribers to watch this level because the market kept on hitting it and bouncing down. On the downside, the 88.50 had been a key level, but yesterday on Friday, or on Friday's market action, you can see the market was in a very, very tight range all day long. In fact, if you take this trend line, which we had on our charts during the chat room all day long, you can see how it kind of just went right through the lows, 1 hit, 2 hit, and then 3, and kind of followed this up. And we had called out in the chat room that when this broke, you'd see a little bit of a down move. Now, the interesting thing about this, and this is really fascinating, folks, is that when we finally got a breakdown right here, you saw the market coming down into a possible head and shoulder breakdown pattern. Now, this wasn't the breakdown of the head and shoulders. This was actually the formation of the right shoulder, and I'll show it to you right here. So let me take that out here, and we'll put in some analysis tools. And you can see a little bit of a head and shoulder pattern developing right here. All right, so you had an initial breakdown. Here's your head and shoulder, but you needed the neckline to break, and I want to show you how accurate this analysis is. Here's your neckline. You connect it from the neckline right here to the low right here, and basically a close below this trend line right here, which also happens to match up with our 90, just under 91 trend line, would have been a major breakdown in the market on Friday. And right here at this time, the market actually traded as low as basically 90, 80 or so, which would have, if it had closed down in this range, been a major breakdown in this market. And what they ended up doing here was getting it to where it looked like it was going to break and then rescuing it. And at this time where it's starting to be rescued, this is the exact time Goldman Sachs is beginning its buy program, and the massive buying in Goldman begins. And ultimately, we know the history of the rest of the day. You had this monstrous squeeze where Goldman was down almost $4 here, reversed to basically close flat on the day. JP Morgan buy programs came in on this same thing, guys. You can see the 200 moving average really starting out, and look at the move on JP Morgan. Was down about a couple dollars, then ultimately coming all the way back to close up 25 cents on the day. Truly, folks, and I'll be honest, I'll be straightforward with you, this was one of the most, major buy programs and most obvious buy programs that I've seen in this market in a long time. And it was very interesting to see it. Now, a lot of people would say that, it kind of happened the last day of May, obviously. Maybe some portfolio managers wanted to add some financials into their portfolios to show that they had them on the books, in the accounts, obviously, on their statements when they go out to clients and so forth. That may have been the part of the case, absolutely. But I think initially the buy program was no doubt about it. It was computerized, and computers can be programmed, absolutely, to have certain levels where if it hits a certain level, you'll see buy programs of 100,000 share blocks go through and just really start driving the market up. Then the rest of it takes effect. Obviously, you have shorts starting to cover that causes buying, and the rest is history as you slide the market up. But there's no doubt here that right here, folks, I mean, look at that perfect hit, and then what happens immediately as soon as it touches that reversal and blast off, as you see massive buy programs come in. Now let's talk a little bit about what we're looking for next week, because I want to just touch on that. We want to go over this chart. Now you see the major squeeze that happened here. Now you came up into a little bit of resistance right here at around 92.80. The next resistance will be the 93.25 range, 93.30 level. That should be a pretty major resistance because you actually have that same level. If we go back on the charts here, and I'll show you exactly what we're talking about. This level right up here, that 93.25, 93.30 level, is the double top on this market. It's also the 200 moving average on the daily chart. But you can see, basically, if we were to touch this level, and by the way, this is a fake print up here, you never really got the market to trade up as high as 93 and change. The highs was really 92.60 or so, 92.55. But long story short, if you do get up here, this will be resistance. Secondary resistance will be right around here, the 92.80 level, as I mentioned. This will be your two resistance levels. And this is the 60-minute chart of the spiders, just to give you a sense of where it is right now. Now on the downside, if you do collapse, and look at the size of this green candle, which was the buy program in the last hour of trading, if you do come back, really the first level you're going to watch on the downside is right here. Notice how you have the tip right here, the highs right here, and this level right here, and over here. So that's telling you there's going to be good support. So watch this level right here at around 91.75 come anywhere between 91.75 91.50 come Monday, Tuesday or so on the downside. That'll be a very key level to watch. All right, so those are your levels to watch on the upside. You're going to watch it very, very closely in the 92.80 and 93.25, 93.30 level, and ultimately on the downside is support on an intraday basis at 91.75. Those will be your big, big levels in my opinion, to watch. Now, what's coming next week? Because next week is going to have a wild week. We obviously are going to see how this squeeze from Friday plays out on Monday. Do we see a sell-off? Do we see some profit taking? Or do we see a continued squeeze in the markets? That's going to be a little bit of an issue here. Also, what you really want to watch for is next week's economic news. There's a lot of key economic news. The big one next week will be the unemployment rate, but we also have initial claims on Thursday. Unemployment rate will be on Friday. That'll be the big one, expectations of 9.2%. You have to really wonder how much you can believe in these numbers, too. I mean, we saw that last week. We saw the revisions last week really being a key to that these numbers are coming out better than expected, but then they're revising the previous months down horribly, and it really showing us that I'm not sure how much we can really trust the numbers necessarily. But that unemployment rate, the market will look to very, very closely. Initial claims on Thursday will be a big one. ADP unemployment on Wednesday will be very, very big. ISM is on Monday to watch at 10 o'clock. So there's a lot. You can all find that on the economic news and events and earnings alerts on our website, inthemoneystocks.com. All right, so watch that very, very closely. But I just want to go over again these trend lines that I have on the charts are the ones we go over in the nightly videos. I'm doing these videos obviously to give you a little taste of what we do. We do it much, much more in depth with oil and the dollar and how much the dollar is impacting and how much yields are impacting the markets right now and how much really that's all that's trading on this market right now. The dollar's having a big one. Obviously, the squeeze in this buy program has a different set of story, but the dollar got smoked again on Friday, and obviously the market in reverse goes up. Whenever the dollar is down right now, you're seeing the markets go up. It's just that simple. All right, why? Because commodity prices go up, metals, oil, and that's all helping the market get a lift. It's really what they call, or what we call, a reinflationary rally, which is exactly what you needed to get things on the table and going again. And that's starting, no doubt about it. Whether it's green shoots or weeds, that's yet to be seen. I am a little skeptical right now, but ultimately you have to watch for this, continue to watch for this. If the dollar starts to strengthen, you may see the market come in just because commodity prices will come in, and that'll really take a lot of steam out of the markets. So then the only thing left will be really technology and financials, and if one of those are weak, you generally will have a down market, no doubt about it. All right, so continue to watch these levels. You can see the line here, again, a major breakdown, nice little call of a breakdown here, but it goes only to the neckline of the head and shoulder pattern, and then it gets saved by that buy program, major rally. Again, watch the 93.25 to 93.30 level on the upside. That's going to be very, very interesting to watch, as you can see on the daily chart, right here at the 200 moving average, and double top. So that's really what to watch. Other than that, have a wonderful week, guys. Good luck trading. Come join the Research Center. Come join the chat room. The webinar is next Saturday, so I strongly encourage you to sign up for that. Have a wonderful week. Take care.